afternoon, everyone. My name is Alen, and I belong to the Computer Science Department. My project title is AI-powered financial statement extraction and DCF Valuation. So, the overview of this problem statement is, and I spent a lot of time in extracting the financial statements and getting it through in the Excel workbook. I've tried to automate it. Now, the phases that my entire project runs through is first is calibration. In calibration, what happens is it takes one financial statement as the input and goes through the entire pages, checks which page has a financial statement, so that it doesn't have to repeat it across the other two financial statements as well. After calibration, the tools that I've used is TF-IDF and CNN, a combination of both, so that if one gives a wrong value, the other can flag it and it gives the correct value in the Excel. Then the OCR and AI extraction, the OCR that I've used is Tesseract OCR, where it goes through the pages and extracts the proper values. Then my USP of this project is the calculation of ratios and the DCF valuation, which I spent a lot of time in understanding it and getting those ratios using the formulas. I've also tried to automate that as well. And there are three cases that I've used where they symbol, depending on the historical conditions of the company. Then another AI commentary is given where what happened across the years is also published as an output, and there's an Excel export which the final Excel workbook is. Now I'll walk through the final output. As I said, 3 financial statements have been uploaded. There's an option to select which font the Excel workbook needs to be, and then a dashboard is created where the important information such as the revenue, net income, enterprise value, and value per share is given. Now, this is the first income statement. From the financial statements, all the values have been taken and confirmed. And the next is the trends and ratios. Most of the time, a VP or an MD doesn't have to go through the entire financial statement. They just need an overview of the company in order to either for the mergers and acquisitions or the IPOs. So I've generated a graph where the important information of the ratios have been highlighted. The first, the revenues are calculated and the EBITDA and net income graph is given. Then going on to the gross margin, EBITDA margin, all of these are the important margins that are considered before considering a company for mergers and acquisitions. Same goes with the balance sheet composition as well. How much the company owes and owes. Moving on to the DCF valuation, the same case which I told, where the symbol conditions were also calculated. The bear case is when the company is not performing well or it might not perform well. Base is the actual conditions based on the historical cases. And the bull case is what if the company performs really well across the next 5 or 3 years. The same thing is forecasted. Then an AIML commentary is given where what happened to the profitability trends, the leverage trends across the years, where we can get a small insight of what has happened. And there's a translation tab as well. And coming to the sensitivity analysis, here I can ask a question of what will happen if the revenue decreases by 2% for the year. Now it gives an overview of how the equity value was before. It was around 18,000. Now if I reduce it by 10%, it will go down to 14,703. Now an explanation is also being generated, like why it has happened. It is because the future free cash flows which led into a lower enterprise value and the equity value. The reason is also given. Then a manual control is also given of what if the value of revenue growth is, let's say, -3. I can run a what if. Again, the conditions are given. Equity value before, as I said, it was 18,637. Now it is 20,328. The explanation is also given. And further, the full sensitivity grid is also given. So that is it. Thank you.